Okay, guys, welcome. We'll get started here Tuesday morning, looking at the markets, figure out what's going on. So if you're new to the channel, this channel is all about technical analysis of the markets. I'm always looking at the charts, looking at the indices, and then individual stocks, trying to find trade ideas. I put those out on this channel. And so if you find value in what I'm putting out, the content, leave me a thumbs up. I do appreciate that. And again, if you're interested in learning about how to use technical analysis to find your own trade ideas and look at the charts, take my course. Link is in the description below. It's not free, but it's I priced it at 99 bucks, so it's very affordable for about 5-6 hours worth of training videos. I think that's pretty fair. So let's get into it. Triple Qs, looking at tech here. Really, the basic thing that I'm seeing here right now is I moved my range here at the top of the range. I think I had it about 322, but we overshot that a couple times. And you can see we've had two reactions up here around this 324 area. So I moved that up. So right now I've got 324 as resistance, and I've got about 314 as the near-term support. And we're really just we're just in that range. We're consolidating within this range. We've tagged the upper end a couple times and the lower end a couple times. So undecided market right now. And right now we're just right about in the middle of that range, a little bit above, but So again, you got to wait for a break one way or the other. And on the hourly, that's really all we see. Now, we did have bullish divergence. Someone pointed it out, and I saw it there. We did have bullish divergence on the hourly right here on the triple Qs. See that? How we made a new higher low in the RSI, and it's also there up here in the PPO. And that was made on this lower price. So that was signaling a short-term bounce. And we did get that, so far we've gotten a bounce, from off that low. We might have a little more to go. We might run up and fill this gap. All right. That's very possible up around 320, 330. It's about 330, 330 to 331. And we possibly might even do a back test of this broken trend line. This trend line in green, if I go to the daily chart, that comes all the way off the March 2020 lows. We had a reaction here. We had a couple reactions right in here. We undercut it, and that was a bear trap. And then we broke down. So we're just trading, consolidating. Another way to look at this from the daily chart, and one of the reasons why I still think we're going lower, even if we do get a little bit of a bounce and maybe gap fill, I still think we're heading down to this 290. It's about 290. It's about 300 down to about 297-ish, right in that area. I think we're heading down there. Another way to look at this is we're just bear flagging. All right, we have the breakdown here. We're consolidating, and then we break down, and you can see the projected target is that 300 area if we're bear flagging, and that's what it looks like we're doing on the daily. So until we break one way or the other, I'm going to go with the trend. The most recent trend, which is down. All right, we broke out of this bullish price action here. We had this bearish rising wedge right up in here. This bearish rising wedge was made with negative divergence. So you can see we are diverging. That signals that momentum is drying up, and we're about to make a trend change. And then you look for a break of trend line support, which we got right here. This February 22nd, that was a gap down, and we sold off. There's your break of support. We had confirmation of a lower day the next day. So again, that is a break of trend. So I'm playing this as if we're in a new downtrend. And so we broke, we're consolidating, flagging out, setting up for what looks like another move, a leg down to 300. So I think we'll get a more sustainable bounce down there at 300, something that's going to last more. Could be a decent rally, could run up and make new all-time highs. I don't know, but I'm just trying to make the call right now that I think we're heading down to that 300. In the short term, look for a break of these ranges, 324 to the upside or about 314 to the downside. SPY. SPY's not giving me the same look, but if you look at SPY going off of, there's a couple patterns to go off of. And I've got a lot of lines going on, but the bigger picture line, if you look at the weekly, this is just looking at bigger picture stuff. Here's your 2009 lows. Here's your trend line support. And I've actually seen several people now on YouTube marking out this trend line. I've been showing this trend line for years. Really since 2018, I started showing this trend line that I felt like was the viable bull market trend line. It's the one in blue right here. And now I'm starting to see it on other channels. So I don't know if they follow me or if they're just coming to the same conclusion. But it's interesting to see that other people are spotting this same trend line. So we held this on the weekly chart. This is a weekly chart, so big picture stuff. Held it all through here on support. We broke in 2018. Fed saved the market. 29, up here to 2020, rejected. Fed saved the market. Both of these recoveries are multiple expansion recoveries based on Fed stimulus, not based on strength. So don't let the media fool you into thinking that way up here at all-time highs in the SPY, and the market got up here based on Fed stimulus, that all of a sudden now we're going to come into a super raging strong economy. The reopening might trigger the sell-off, all right? So it's kind of priced in that way right now. Like we're up here not based on a strong economy, we're up here based on Fed stimulus. You pull away the Fed stimulus, and the economy left on its own, might be strong for a little while, but likely going to be weak, because in reality is the market's not up at these prices based on just a strong economy left on its own. The market's up here based on, if you really want to look at it, you've got tax cuts and corporate tax cuts, which helped prop up the balance sheets for corporations and stock buybacks. That's basically what this was. Then you had Fed cutting rates here in 2020 and doing more QE, and then you had Fed cutting rates, what little rates they had left, and doing even more QE. So pretty much the last, going all the way back to about 2017 or so, has been pumping the market through some form of stimulus. If they pull that away, then we're likely going down. So again, SPY, we're right here at resistance, kind of rejecting, but still in the area. So I'm just watching that trend line. If you look at the daily, I don't have a good read on the SPY right now. I suspect we're probably going to tag this trend line some more and just continue to kind of reject. But watch the Qs, because I think if the Qs breaks down, the SPY is going to follow. If the Qs starts to break down, you're likely going to see financials start to break down and some of these other ones. So Qs and financials are important to watch. Here's IWM. So I don't have a broken trend line on IWM. Basically, you've got this trend line right here. It's somewhere right in this area, and we've just been walking up that. We briefly broke it, but didn't get the close below there. So small caps have not broken down, and I don't see a sell signal on small caps as of yet. So again, until we get that breakdown, small caps to me looks like they're continuing to uptrend. However, this purple line up here that I've got, this is coming off the weekly chart. I think this is your bull market trend line. So here's your 2009 lows. We undercut it once, but then we started to fall in line and create a nice clean trend. So every tag of that was held as support for many years. We then broke, and then this monster rally, the COVID rally, has really rallied us right up to that resistance line. So I think we're going to, we're tagging this from below as resistance. I think it's likely going to hold. Whether we overshoot it just a little and then fail, that's always possible. But I do think we're going to, this will hold, and we are, likely going to see lower prices in the future. In the short term, I just wait for a break of this trend line, some sort of a sell signal. So something to note on the long term, the long bond, and this is what everybody's focused on because it impacts the 10-year Treasury interest rates, which impact mortgages and car loans and credit cards and all interest rates for the most part are tied to the 10-year Treasury in America. The thing about the long bond is we got this blue trend line. This line has held as support for many tags of it. You can see we held support here, held support here. We broke it, and then once we broke it, it was resistance, tagged it. We broke back above and held support again. And then recently, we fell right down to that trend line. So right on the first tag of that trend line, the buyer stepped in and we bounced, but now we're coming back to it. So the thing is, I could see us dipping back below that and making new lower prices in the TLT, causing interest rates to spike again. And if they spike again, you're likely going to see the next move down in the markets. I don't see any change in trend on the TLT right now. Looking at the RSI daily and the PPO, all I see is downward momentum. I don't see a bullish divergence showing up, anything like that on this daily chart. So I think it's possible that we run down and spike down again, making new lower lows, and then maybe we'll put in a bullish divergence on the TLT as markets sell off, and then bonds will start to rally from that divergent low. So that's a possibility. Right now, we're just I'm kind of watching this level at it's about 139. We'll call it 139, but 139.50 or so. Watching that level, if we start to break and get a close below there, then look for more selling in the TLT, which should start to spike interest rates and impact markets again. Okay, let's take a look at gold. So this is gold bullion, kind of hanging in there. So we'll see, but you can really here's what I'm trading off of on gold bullion. All right, I've got this trend line coming off May 2019, and we had the reaction right here. This is the COVID drop. So it's not my favorite trend line because I only have 2 data points. We are starting to get a reaction right here. So if we start to turn up, we'll confirm this as a trend line. Okay, sorry, I had to take a quick break. Gold, so we're holding this, what looks to be a trend line. Again, I wouldn't trade specifically just on this trend line, but we also have what looks to be bullish divergence. So I kept pointing this out where I thought we were going to get bullish divergence, make a new low, and hold that. You can see here on the RSI, as I zoom in, we made an equal low right here as the former low. So anything equal or higher is bullish divergence, would be a divergence, and that equal low is made on a lower price down here. So this is a divergent low, indicating that a trend change is likely. So now, the trend change right now, the trend is down. All right, this is the near-term trend. It's been in a downtrend really since August. But the larger trend on gold is, to me, looks bullish, looks up. Basically coming all the way off, if you really look back all the way off of the 2015 lows, we've been making a series of higher highs and higher lows. And so that's a bull trend. That's a bullish trend. So I look for areas and a bullish larger trend, a bull market, like which gold is in. You look to buy at major support, and that's what I think we're at right now. So again, this has been a pretty good correction in gold. It's these flush out the weekends, and then you make the next leg higher. And then towards the end of that leg, everybody will be bullish gold. It'll start ramping higher, and that's the area that usually you want to get out. So as of right now, that looks good. The miners are doing well today. Let me kind of look at some of these. You can see, like, here's Barrick Gold up almost 5%. Looks good to me. So on Barrick, here's the thing. We have a bullish falling wedge right here on Barrick. See the wedge that it's been making right there, and here's the lower end of it. Now, just the last few days, we dipped to the downside of that bullish falling wedge. This is a low probability area. When you have a bullish pattern, when you break below a bullish pattern, usually that's stop, kind of a stop, running stops and just a fake out move. And then you look for the recovery, which we do have today. So pretty impulsive recovery, up 5%, back into the bullish rising wedge. Now, what I'm also seeing show up on the RSI just recently on the daily chart is bullish divergence, just right there, just starting to get it. So you can see that this low right here was a divergent low, which made a higher low on the RSI while the price was a lower low. So there's a bullish divergence in place on the daily. There's a recovery of this bullish falling wedge. To me, this looks good, and I think if you wanted to be conservative and really wanted to wait, again, I've been building positions of gold miners the last 2 weeks, but if you wanted to be conservative and wait, then you could wait for a break of this trend line right here, a break out of the bullish rising wedge, some sort of an impulsive break, depending on when we get it, or if we get it, and then that should set this up for the next move higher. Likely at least hitting the highs here at 31, but I think it's the higher probability, since we've already been up there, is to continue the bullish trend. So here's your 2015 lows in Barrick Gold. You can see lots of reactions along this trend line. Again, I didn't think we were going to get back down to this trend line. I think what we're going to do is start to make another leg higher, and I really think the all-time highs are probably in sight on this thing. If we start to break bullish, I think we're going to head up to these all-time highs and probably exceed them, but we'll have to wait and see. So a lot of the gold miners are looking good today. Target, TGT, so they reported earnings today, and I didn't catch this one in advance, but you can see here after looking at it, here's your daily chart. You have an uptrend right here on Target. This is coming off the March 2020 lows, just like everything else that was rallying basically around that time. And you can see recently as I zoom in, we started to break. It wasn't that impulsive. It was just kind of a drift lower. Today they reported earnings and it gapped up and opened right there at 193.38, right at resistance basically, and rejected and sold off. So that's a back test and a failure. This thing looks like it's going lower over time. We have a gap down here. I think that's the obvious target that target wants to go to. Right there at about 138.75 or so. So I suspect it drifts down towards that. Probably won't actually gap fill because it's so obvious. It could, of course, but I think we drift down towards that. And I'd be looking, if I was going to trade this, I'd be looking to cover down towards the gap fill. That would be the target. From where we're at now, that's a move of about 21%, 22%. The only thing I don't like about this one, one of the reasons why I'm not really going to take it, there's no negative divergence. All I have is negative momentum. You can see it right here. Just negative momentum. We never made a new high putting in negative divergence. We just have a drop-off in momentum, a drop-off in price. Not my favorite setup. I prefer to see that divergence show up and then look for a break. We just didn't have that divergence, so something to look at. Now, yeah, if you want to extend the divergence out farther, then you can, and you would see that we do have negative divergence here and also here. This is all divergent high price action, so that's fine. That makes sense. We didn't have that impulsive breakdown. This is just it just started to drift lower. It wasn't that impulsive. So it's just not my favorite setup. Today does look good. It does look more impulsive, obviously, with the gap up and then the impulsive rejection lower. So, could trade off of today. Again, I think it's heading lower. Okay, Neo, so I'm still short this one. Again, this is swing trading, so, it takes time. When you take positions, you have to let your trades kind of play out. And as long as nothing technical changes in the trade, I stick with them. And so Neo, here's what I like about Neo. You have this trend line right here. We broke that trend right here. Pretty impulsive because you broke down and then the next day you gapped down. So closing below. So there's your impulsive sell signal. And then we've just, we've been kind of consolidating a little bit. But again, drifting lower over time, down almost 11% today. And it doesn't look like there's really any support from where we're at right now. If we don't really hold right about 44.62, then I think we're heading down to about $40. That's the next level of support. Probably get a reaction there. We break $40 and there's really nothing below. A break of $40 I think sets us up all the way down to 22. Something to look at. Neo also big negative divergence. So you can see all this price action up here was divergent highs. You look for a break of trend. There's your break of trend. Now we look for a change in trend, which would be down. So I do think we're heading down to 22. We break that, yeah, we could get down to this $9 area because you can see we got some gaps down here that have never been filled. So something to watch for. Okay, Redfin, this one looks weak to me. Here's what I like about it, why I think it's heading lower. And I know I'm pointing out a lot of short trades. That's just because, we're at all-time highs. We're right up near that major resistance in the SPY at near all-time highs. And that, looking for markets when you're at major resistance for markets to move down, well, that's why I'm pointing out the short ideas. If we were, if we had a big bear market and been selling off or at some major support, most likely everything on the channel would be looking at longs. But this is kind of where we're at. So Redfin, couple things. One, we have this resistance line right here, 82.79. You can see we tagged it here, and then we broke above. Then when we broke above, that was a breakout, but that breakout failed. Big impulsive failure candle. See that big red down candle? That's a rejection. So this false breakout, bear trap or bull trap right there. And so that is just bearish in general. Now you've got a back test. We tested it again at 82.30 and, starting to reject. This to me looks very probable that we're heading down to this lower trend line. You can see we had some reactions along this trend line. We broke below, tested it from below, then we broke above. So I think we're heading straight down to that, which is about $60. That's a drop, depending on when you get there, but we'll just say about 20%. And then we'll see. I don't know. Maybe it'll hold there. Maybe it'll break. We did have negative divergence right there. So this was a divergent high. See how we made a new higher high above this previous high, but the momentum was much less. So divergent highs have a higher probability of failing. It did fail. So now I think we're heading straight down to $60. I like it to the downside. Okay, that's really all I got. If you guys want me to take a look at any stocks, leave a comment below. I'll try to round those up, see if I see anything interesting. I'll look for long ideas. I pointed out the oil stocks back in February, I believe, or January. They've gone up 60% or so since then, just some more than that. So, I point things out when they look, when they look bearish or bullish. But right now, given the nature of where the market's at and the big negative divergences across the board in the SPY and the tech sector, I'm more interested in looking for short opportunities. I think there's better risk reward to the downside than there is to the upside. We can continue to grind higher, a couple percent here and there, but when you get that downside, it wipes it all out. So I think there will be more opportunity to the downside right now. All right, guys, thank you. Catch you on the next one.